Welcome, everybody. My name's Gary Fortney, and this is The Trend. Well, thank you all for joining us again. As you know, our three main topics are law enforcement trends. Also, we talk about the economy, other things regarding what's going on in real life. And that's what we're going to talk about today, actually. We're going to talk about some regional issues that are going on and the fears that people are feeling right now in the country. And I'm going to start off, again, we don't get into politics, but it does tie into the political environment that's taking place right now and some things. So anyways, as you know, we recently had an election in 2024. And the elections came about where we elected President Donald Trump. And we also have the Senate and the House, which is controlled by the Republicans. So what happened is as a lot of people say, elections have consequences. What does that mean? So what that means is the politicians usually make promises to people. And I've been in elections since 1970, all right? The first election I voted for involved Gerald Ford and Jimmy Carter. And I voted for Gerald Ford because I was from Michigan. I grew up in the Detroit area. And Gerald Ford attending University of Michigan, and he was basically a Michigan native. So I did it more on him being a hometown person versus the political environment, which I really didn't understand back then, but I liked what he had to say. So that was my first election, 1976. And where did we progress through today? So the elections, when they happen, politicians make promises. And I've seen politicians make so many promises along the way, and I've seen politicians say they're going to do certain things. And I can tell you from my experience, 9 times out of 10, the politicians do not come through with what they say they're going to do. They say whatever it takes to get elected. And it's not a party issue. It is a personality and an issue. All there is to get people elected. So basically, what I want to talk about here is what's going on with the economy right now, what's going on with the political environment, and where we're at today. So what I want to talk about is the promises that were made by Trump. What promises did he make, and did he keep up with those promises? And remember, Trump won the election, and he won the election by both the popular vote, which is the majority of the people in the country, as well as the electoral college, which is individual state elections. And they're giving us so many electoral delegates, and that's how they're elected. So Trump won both the popular vote as well as electoral college. And so the thing is, the people that voted for Trump, they voted for him for the promises he made. And the promises he made, has he been upholding what he said he was going to do? And that's what we're going to talk about today. And that has created some turmoil currently within the political environment as well as the economic environment. And the biggest issue right now are people's investments. All right. And why are the investments going down? What should people do? How did this happen? Has this ever happened before? And so we're going to talk mostly about your own personal wealth and well-being and giving you some confidence regarding the stock market and your investments. And it's all based upon your age, all right? So we're going to talk about that a lot today. And I want to make sure I put people at ease about what's going on with your investments and so on. And why is it good when the stock market goes down? Why is it really good when it goes down at your age? So anyways, let's talk about some promises that Trump made during the election. One was immigration. We had a lot of immigration during the Biden administration where we had millions of people come into the country. And millions of people coming into the country, they came across the border. It did basically what's called catch and release. They caught the people coming into the country, and they gave promises to attend for court. And then that's how people were released into the country. And I remember looking at the border back then thinking, there's a lot of people coming in. And when they have people coming in, we have to pay for them for living. We have to pay for them for meals, pay for them for transportation, and so on. So again, I'm not trying to be political. I'm saying what the perception was at the time and what the reality was at the time. So one promise that Trump made was going to stop the illegal immigration coming across the border. And that was a promise that he made. And I think that was a big part of the election. The next, he talked about cutting the federal deficit and the federal debt. So what does that mean? If we all ran our finances like the government, we would all be bankrupt. In other words, the government takes in so much money, and yet the government spends more than they take in. And this is not based upon a political party. It's based upon the candidates and the politicians in office. So for many years, it's gone through both Democrat and Republican presidents and Congresses of taking in more money than they're spending. All right. And so Trump said he was going to reduce government spending while not raising taxes. All right. And so that's how DOGE was created. DOGE stands for Department of Government Efficiency. So Elon Musk was running the Doge project along with some people that he had brought in to locate areas of cutting. And that's created a lot of controversy right now about nobody wants any of their programs cut. And I'll tell you for one thing, I own two companies. And if I had people start cutting some things in my companies, I would disagree with it. So we understand the disagreement that came in. But every president, be it Republican, Democrat, or whoever, has promised to cut spending within the government because we are trillions and trillions of dollars in debt. I remember in 1990, the United States was $3 or $4 trillion in debt. 1990, all right? And now you're talking tens of trillions of dollars in debt now. So the spending, out of control spending, has gotten worse. And while some people don't worry about it, I do, because I see what's going on regarding the out of control spending. And when does it stop? It has to be stopped at some point. And I guarantee no matter what president it was who's going to try to cut spending, the other party's going to disagree. I remember Bill Clinton actually is one who instituted original spending cuts. And let me tell you what Bill Clinton did to that was really good. He balanced the budget. And so what does balancing the budget mean? Bill Clinton was able to have the funding coming in, which is equaling the expenditures. So balancing the budget is really important. And I think all of us should be able to balance our own individual budgets. When you spend more than you have coming in, that's going to create more debt with you as an individual. And when politicians see more money coming in, they start spending it. And I have been told it's their money. It's our money. Whose money is it? It's the taxpayers' money. It's the American citizens' money. And so eventually, I believe the economy is going to implode. Let me talk about my experience also. My college education includes basically 4 college degrees. I have a master's degree in business, which focus a lot in the area of finance. I do know a little bit of accounting, but I'm not an accountant. I'm a finance person. I have a double bachelor's degree in management and business administration, and I have a certificate of specialization in business administration. And I understand the economy. I went through a lot of economics, a lot of finance, a lot of understanding the characteristics of investments and investing. And my background, from what I have seen throughout time, has led me for sure to believe that as things got worse, they're going to get much more worse in the future. I am in my late 60s, getting close to 70 years old. I'm not really worried about myself. Who am I worried about? I'm worried about the young people, the young population being burdened with excessive debt. So if you have $1 coming in and the interest you're paying on that dollar is 60 or 70% of that dollar, you're able to spend 30 cents or 40 cents of that dollar. And what's that going to do? That cuts our spending power. And that's money that is owed to creditors. And again, what if you ran your finances like the federal government? So that's where Doge came in to try to cut the spending of the federal government in areas that they saw that was a waste. And I did work for the government for a while. I worked for the federal government, both as a contractor as well as working for one of the law enforcement agencies. And I saw issues of spending that I thought were ridiculous. And also in my research and in my personal life and professional life, since I own a couple of companies, I have to watch expenditures. So I believe it was overdue to have spending cuts. Again, nobody wants their programs cut. And that's created a lot of problems right now with some political environment between the two different political parties. All right. So another thing that was promised were tariffs. And what is a tariff? The tariff is a charge on goods and services coming into our country from overseas. When tariffs are imposed, it's a premium that the countries pay. And so there were tariff or deficits in trade. So what does that mean? Let's say the U.S. exports $5 billion. That's how much we're making to produce our goods to ship overseas. What if the same country were importing $20 billion of their goods? So who's making out? The United States or the other countries that are shipping more in than they are taking of our goods and services? And I think they should be equal. When you have a trade deficit of you're importing more than you're exporting, we could actually increase our manufacturing. We can increase overall our ability to have more money for the American people. And so tariffs were part of a program that was going to be implemented to try to get the tariffs in line with each other about what is being exported versus imported. And tariffs are based upon a percentage, which are basically a dollar figure. What percent tariffs are being charged on U.S. versus the U.S. charging tariffs on other countries? And what I have seen, there's such an imbalance with the tariffs. So those were promises, the main promises that were made, which ties into the current economy going on, that were made by the current administration. And so think about this. He was voted on implementing what he said he was going to do, Trump. and he's implemented what he said he was going to do. And yet people are angry, people are mad, and I've seen some violence taking place over some of these things, specifically with Tesla. Elon Musk was running Doge, and then all of a sudden, people are attacking Tesla cars. Musk had sold the cars. Actually, Musk only owns a small percentage of Tesla. I don't know if you know that or not. He only owns a small percentage. Who owns the other percentages of Tesla? It's the public. It's the people. And also, it is pension funds. If you have a 401k, BB, 457 deferred compensation program for government employees, I guarantee part of your assets that you have invested are within Tesla. So you had some individuals saying they hope Tesla stock goes down and gets hammered. Well, if Tesla stock goes down, are they really hurting Musk or who are they hurting? The American people. And so the violence that has taken place, to me, no matter what side it is on, no matter what side is wrong, because you're hurting innocent people. And I look at it this way too. Electric cars were implemented for the purpose of trying to cut down on the carbon emission. So people have bought electric cars from different car companies. Now, the people that wanted to cut the emissions are now burning Tesla cars. And so I just think it's kind of outrageous. Again, you're hurting innocent people. You're not hurting the main people. So again, I don't want to get too much into the political atmosphere. I'm saying of what's going on within our environment right now. So let's talk about impacting the stock market. The stock market has been impacted pretty severely with the introduction of the talk about tariffs. And so what does that mean? The stock market is based upon three main indicators: the Dow Jones Industrial Average. So the Dow Jones Industrial Average tracks stocks of the main 30 companies in different sectors of the economy. Then you have the NASDAQ, National Association of Securities Dealers Automated Quotations. The NASDAQ is basically made up of technical stocks, tech stocks, and it's definitely a smaller index than the Dow Jones Industrial, but it's more wide-ranging where it covers a whole lot of industries, but majority is the technical industry. So when tech does good, the NASDAQ does good. And when the NASDAQ does good, the people do good who are investing in those individual stocks within the NASDAQ, all right? And the last one, the S&P 500. That stands for Standard & Poor's 500 index. So why is it called the S&P 500? First, the Standard & Poor's, which is a company. And they are a credit company. They track credit ratings and so on. But then what about 500? What does 500 mean? 500 are the number of stocks that are tracked in the S&P 500 index. So if you have 500 stocks that are in the S&P 500 index, that's tracked on a daily basis. Are those stocks going up or down of the 500? Let me talk about the 500 stocks that are part of the S&P 500. Those are solid companies. If there's some lagging companies that are not meeting the expectations of the economy or what the S&P thinks, they will dump that stock and bring in another one. That is a solid company to show the growth and to show the return of investment that these companies are making. So there's our three main indicators. You have the Dow Jones Industrial Average, the NASDAQ, and the S&P. Investing. So what does investing mean? There's three different places people put money. There's the stock market, the bond market, and cash. So let's talk about this a little bit. And I'm going to get into a little bit more investing aspect now. So let's talk about investing. The current inflation rate right now is about 4.5%. What is inflation? Inflation is the increase in the cost of goods and services for any country. How about Iran? The inflation rate is like 200%. That means all their goods and services are going up 200% on an average. So what is the current inflation rate for the United States? It's about 4.5%. I think it's still way too high. That's the unemployment. It's about 4%, the inflation rate. So if you have inflation at 4%, and if you have a CD that's making 2 or 3%, are you making money or losing money? So again, you have inflation at 4%, but you have a CD in a bank that's making 2 or 3%. You're losing money because you have to beat inflation to be able to have a return on your investment that is positive. You need to beat the inflation rate to make money on your investments. And so you need to look at every day, where should I put my money to actually beat the inflation rate? Where can I put my money? Let's talk about bonds. Years ago, people heard about bonds, and the only bonds people heard about were savings bonds. Savings bonds always had a positive rate of return, but you're talking maybe 2 or 3% rate of return. And that's historical. So savings bonds are a bond backed by the government, and they had a stable rate of return. But then you have other types of bonds. You have government bonds and corporate bonds. Government bonds are issued by the government, and government bonds are tracked based upon the current interest rates. That's how they go up or down. Then you have corporate bonds. A bond is a promise to pay back money to the company. So if you have somebody buy a corporate bond, or if you have somebody have stock in the company, if you have somebody buy stock in a company, all right? If the company goes bankrupt, the bondholders get paid before the stockholders. So bondholders are more secure if they own part of a company. Here's the negative part. Bonds can and do lose money. I forgot to put that. So people think bonds always make money. Bonds lose money. As interest rates go up, a bond loses money. And if interest rates go down, bonds make money. And those are our bonds. So again, in a corporation, if you own stock or if you own a bond, if the company goes bankrupt, bondholders get paid before stockholders. All right. However, what makes more money over the long term? And those are stocks. If you own stock in a company, that means your income is based upon the profitability of an individual company. When a company does good, you do good. And if you want a secure investment, you can go to bonds. But again, bonds go down also. So I would never go in the bond market. Let's talk about stocks. Stocks are ownership in a company. You could own maybe 100 shares of Disney, let's say, 100 shares of Disney. That means you own part of Disney. You might own maybe a one broom that's in the closet of Disney, but you do own part of Disney. So whatever company you own stock in, you own part of that company. It's called ownership equity in a company. So where should you put your money? All right, let's talk about this a little bit. People that need to be secure. I can't handle my investments going down. They'll put into a bank. Let me tell you right, a bank or a CD is not investing. That's saving. Investing is trying to earn more money from your money. Saving is putting money away to have it safe and secure, never going to go down. But again, if you're getting 2 or 3%, you're losing money every year to inflation. What happens is some people say, hey, I got 30% return on my investments last year. 30%. Well, I got 2%. Then they want to now chase that return. Where'd you have your money? Stock market. Well, I don't trust stocks. It's all based upon your age. Anybody who's 18, 19, or 20 or 21 years old should not be putting their retirement money in a bank. You need to invest it. So here's a couple of different things you can do to invest it. You can buy bonds or stocks. I would say if you're young, don't buy either of those. You buy what's called a mutual fund. So what is a mutual fund? A mutual fund is a fund where a company sells these funds that are made up of a combination of stocks and bonds. Well, stocks and bonds are put into this mutual fund. So stocks are always more aggressive than bonds, always. So what's somebody old? Again, I'm getting close to 7 years old. If I have investments, should I have more stocks in my investments or more secure in my investments? Because I cannot handle the volatility of a stock market. I cannot handle a 5-year downturn in the stock market. I need to have my money invested, all right? How about somebody 18, 19, 20, 22 years old? Should they be in savings in a bank for their retirement? Of course not. Should they be in only bonds? No. They should be in either stocks or mutual funds. I never, ever propose young people or people that don't understand the stock market to buy individual stocks. And I always ask them a couple of questions. Hey, what's the PE ratio of that stock? They go, what? What's the PE ratio? What does that mean? Price to earnings ratio. What is the price of the stock relative to the earnings of the company? If you don't know what a PE ratio is, why are you even buying a stock? You should know the PE ratio of an individual stock. How about a balance sheet? All right. I say, hey, what's the balance sheet look like of that company that you own stock in? What's the balance sheet look like? What's a balance sheet? And I say, you don't know what a balance sheet is? You have a strong balance sheet and a weak balance sheet. It shows your assets minus your liabilities and then owner's equity. So what if you have a balance sheet that you have $5 million in assets, but you have debt of $40 million? Is that a strong or weak balance sheet? That's a weak balance sheet. That means you don't have. What if you have $400 million in assets, you only have debt of $1 million? And then the other is part of your owner's equity, okay? So again, if you cannot even read a balance sheet or understand a balance sheet of a company you're investing in, why would you even do that? How about an income statement, all right? Income statement is your income minus your expenses, and that shows what your net income is. If you have income of $5 million and expense of $12 million, like the government, all right, you're losing money. And so I do not propose anybody buying individual stocks unless you really understand how to read the stock that you're going to buy. And so what I talk about is young people should be in mutual funds or investments in their 401ks or 403bs or 401as or 457bs. All right. And what do those numbers mean, by the way? What is a 401k? What's a 403b? What's a 457b? People say, what does that even mean? All that is the location of that investment in the IRS tax code. Section 457, subsection B of the IRS tax code talks about pension supplemental investments for government agencies. It can only be by government agencies, which I have at least I had a 457. I now roll into an IRA. And then what's a 401k? It's an investment vehicle for people that work with for-profit organizations. That's section 401 subsection K. What's a freebie? Freebie is just like a 401k, except it's for nonprofit organizations. So understanding even the numbers, what it means is really important. So I would propose to younger people out there, please, 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 please look for solid investments within mutual funds instead of buying individual stocks or bonds. Now, here's the fear a lot of young people have. And we're going to tie into the current economic environment. The stock market was historically up to about 44,000. All right. When I retired, the stock market was at 8,000 when I retired. See, I can't believe the stock market is at 10,000. And then it went to 15, then 20. So now the stock market is at almost 44,000. All right. It was a historical high. And think about the money that I have made since I retired. I retired 16 years ago. Think about all the money that people have made who have been in investments of mutual funds. They have made a lot of money. So what about the young people? They say, well, the market's going down. I can't believe it's going down. So what should somebody do when the stock market goes down? What do you think? What should somebody do when the stock market goes down? Especially young people. You buy more. When the market goes down, that's called being a contrarian investor. When the stock market goes down, you should buy more when it's down. When the market recovers, you'll be making a lot more money. Here's the biggest mistake people are doing right now. They are taking their investment money when the market went down and they're taking it out and putting it into a safe investment. I'm going to get 1% now in my savings account. Oh, I feel so much better. I got 1% in my savings account. I'm not going to lose any more. Well, the market was at about, I think, 1,038, and now it's back up to 41,000. As of right now, why I'm sitting here, all right? The market is at 41,427. So we've had a recovery of several thousand points from the low. What about the people that got out when the market was 37,038? I feel so much better. And they're in the 1%. What percent of an increase is it from 37 or 38,000 to 41,000 right now? What percent have they lost on their money that they'll never, ever, ever gain back? Think about that. The market is up 0.27% in one day. It's been up multiple percents from its low. So all I can say is this. Those of you that are young, you should be investing on a systematic basis. When I was on the police department, we had money taken out of our paychecks every 2 weeks, out of our checks. It all automatically went to our investments. And so money started growing and growing and growing. I was so happy in 2008 when the stock market went down. That was the housing crisis. We were in a serious recession. It was almost a depression. Those of the younger people don't remember that happening. I remember 2008. And those of you a little bit older, you'll remember 2008 too. One thing I remember, when the housing crisis happened, that was based upon giving loans to people that cannot afford their loans, and they default on a lot of their loans in the housing industry. So in 2008, I remember this. I'd be driving home from work on a police department, and I would see all the businesses with nobody there. Nobody. In other words, you'd go buy a restaurant, nobody in the parking lot. People were not spending money because they were losing money in their investments. And I felt bad for a lot of people. I'm going to say I didn't feel bad. I felt happy, because what was I doing every 2 weeks? Putting more money into my investments. I increase my investments every 2 weeks. A lot of people called me because I do a lot of assisting for people. I'll talk about this in a second on the department. Gary, what should I do? I says, put more in. And how can I do that? I can't put more in. When the market's at the lowest point, you want to keep on investing. If you're in your 50s or 60s, you never should be aggressive in the stock market. You should be balancing it off a little bit more, pay for investments. So what do I do now? I work for Fraternal Order Police Lodge 111. The FOP Lodge 111 is a Fraternal Order of Law Enforcement Officers, and Lodge 111 is for the St. Louis County Police Department. You have other lodges around the entire country. There's numerous lodges in the state of Missouri. So what do I do for FOP Lodge 111? I actually help people talk to people getting ready to retire about what they can expect in retirement. I look at their retirement paperwork. I go over the retirement paperwork with them. I assist them in understanding what Social Security is, what Medicare is, what the marketplace is for insurance. And what happened is we used to be allowed to be on the St. Louis County group health insurance policy. And when I retired, I stayed on the group policy. My wife, when she retired, she stayed on St. Louis County group policy. We had to pay the group rates, which was between $700, $800, and $900 a month for our insurance. Well, all of a sudden, a decision by St. Louis County government decided that they're going to take that away from us. So then they canceled our insurances. And I'm battling some illnesses right now. And the unknown out there, people were panicking because right under everybody's nose, the county decided not to let us stay on the county insurance anymore. So people were scrambling to get into the marketplace, all right, for insurance. And that really put some people in fear, all right? So, of course, police officers and citizens are resilient. They found ways to make it through there. And so anyways, the insurance issues, while not happy, people have had to find alternates for insurance. So that was going on then. All right. So a little bit about the insurance with St. Louis County government. So anyways, in 2008, it went down, recovered, went back up. Now we're at where we're at today. And we're at currently, let's see, what's the market at right as of right now? We are at 41,432. It actually went up. It's up 114 points. This is the Dow Jones Industrial Average. I want to tell everybody out there, please, all right, don't panic. When was the last big panic people had for the stock market? It was during COVID. Let me talk about COVID, how that hurt so many people. I can talk personally about COVID, about some of the things were instituted by the government and what that did. Some of the decisions made by the government caused a lot of businesses to go out of business. Young entrepreneurs, people that put their life savings into their businesses. With my company, I was still doing my law enforcement training. I had employees. I had to take thousands and thousands of dollars out of my investments to make payroll because we are still training law enforcement agencies. We are still doing all this training, all right? But they were not having any of the accounting people reimbursing my company. So what happened, I had to make payroll and I had no income from the obligations of government entities paying me to make my payroll. So I took, again, thousands and thousands out of my own personal investment money to make payroll. I never missed payroll. I had to reduce and kind of spread out over some time period. And that's why I differ with politicians a lot. Politicians who are a lifetime politicians, they've never had to make payroll in their life. They've never been an entrepreneur. What is an entrepreneur? It's where you have an idea. You have an idea about do something. You write it down, you do a plan. And then you have to have the plan, then you have to have the money to fund your business. And then you have to have the political will and the risk to put all your money up to start a business. And I've done that twice in my companies. So I had to take the money, the risk, and my ideas, and having a business background helped me a lot to do these two companies. But when COVID happened, a lot of people did not have any money coming in. And they could not support payroll. They couldn't get any more bank loans. And so the businesses closed. Young entrepreneurs, I felt so sorry for them. Where I live out here, my wife and I would go to all the local restaurants and we would support every day buying something from a restaurant. We would give 50, 60, sometimes 100% tips for the waitresses and the servers and the men serving, all right? We paid 100% tip on the bill. We bought food to go because they were not letting even people sit inside the restaurants. We were supporting businesses. A couple of restaurants close by where we live made it. Not just because of all of us that went in there and we supported them. And so that's what's going on right now today is the fear of the stock market is creating a fear that you're going to lose all your money. And all I want to tell everybody out there, we're getting close to finishing off here, is you have to have patience. You have to have an understanding. The tariffs that are being implemented right now are hurtful. It's painful right now. People taking money out of the stock market. I truly believe that if we have a balanced tariff between countries that have imports with and exports, if we have a balanced tariff initiative, that means we're increasing more money for producing things within the United States. And I see when companies move out of the country, that hurts the people that are working here. When you have major auto industries, major production companies, how about the pharmaceutical industry? And we're depending on countries like China and India to make all of our pharmaceuticals. I mean, and they're making them. Why can't we bring it home here? A lot of it's labor costs. A lot of our labor costs here are more expensive than other countries. What they're paying somebody in India, in China, or in the Southeast Asia area, they're paying the workers pennies on the dollar from U.S. People make. So it's a decision. Do we bring companies back to the United States where the cost of goods and services are going to go higher, but to employ American people? Or do you want to have production of our vehicles, our pharmaceuticals, or other goods and services outside the country, and they're cheaper? This is a choice we have to make. So a decision was made to implement the tariffs. And a lot of people did not like the tariffs because now it's hurting some of their investments in the stock market. I've been around a long time. I've seen ups and downs in the market, ups and downs in the economy. And the United States has the best economy in the world. We're the best country in the world. And we're very resilient. And so what I want to tell everybody out there, if you have money invested in the stock market, if you have money invested, that's your life savings. If you're in your 20s, 30s, 40s, or even your fees, put more in, stick it out. The investments will recover. If you get out and sold all your investments and you got into a bank, you're never, ever going to recover the money that you've lost. All right. So again, we're going to talk more about the economy, more about investment trends and so on in later episodes. This is more of a boost, a mental boost to those of you out there and even some of my employees. Remember, best country in the world, the best economy in the world. We manufacture so much here. We're the breadbasket of the world, which means we can produce our own food. We can be survivability on our own food. We can survive on our own energy and resources. We can have so much here in the United States. And I think bringing a lot of our industry home will help a lot of the individual who need jobs. I also think it's going to help all of us individually in our country recover. And we really got to get the deficit and debt down in our country. So again, thank you all for listening. I promise we'll have subsequent episodes on the economy, investing, and so on. And again, stay informed. Again, we do, even though I think a little bit political this time, but not too much. We do have the facts about the politics. Everything I said was factual. Some may have been a little personal opinions. But again, facts about the politics. Stay tuned and stay informed. And we'd love to have you back for future episodes. My name is Gary Fortney, and this is The Trend. Thanks, everyone, for tuning into this episode of The Trend. If you have any questions, comments, or suggestions, please feel free to reach out to us at The Trend's website at www.trendmediallc.com, or you can email us at any time at thetrend@trendmediallc.com. We welcome everybody's comments, suggestions, or reviews. Don't forget to stay connected with us on social media. Follow us on TikTok and Instagram at Trend Media Podcast, and join the conversation on Facebook by searching The Trend Podcast. Check out our Amazon page through the link on our website, where you'll find some of our recommended products. We'll be back next time with more true crime stories, insights on law enforcement trends, and current trends with our region and the people we serve. Until then, stay curious, stay informed, and stay part of The Trend.